Islamic finance includes the prohibition of interest on ethical investment. It lays emphasis on productivity, equitable contracts, profit sharing that comply with Sharia principles, and also positively contribute to macroeconomic stability for both developing and developed countries. Welcome to another episode of Islamic Finance Daily Update, where we bring you developments in the non-interest finance market. We begin with the story that Saudi Arabia's consumer price index jumped 6.1% in July compared with a year earlier, boosted by a tripling of value-added tax, official data showed on Sunday. The annual inflation rate in June was 0.5%, the smallest increase since January, before the value-added tax increase to 15% from 5% came into effect on July 1st. The jump in annual inflation reflected price increases in most categories. The General Authority for Statistics said food and transport were major contributors, rising by 14.6% and 7.3% respectively. Saudi Arabia, the world's biggest oil exporter, said in May that it would triple VAT as it sought to shore up finances hit by the twin shock of low oil prices and the coronavirus pandemic. Monica Malik, chief economist at Abu Dhabi Commercial Bank, said in a research note that private sector activity is expected to remain soft in the second half of 2020 due to the VAT increase and the impact of higher inflation on consumer spending, compounded by lower government spending and a deterioration in the labor market. We estimate that a rise in value-added tax to 15% would raise some 3.5% of GDP annually in additional non-oil revenue during normal times and after the initial impact on consumption, Malik said in the note. However, we expect the additional revenues to be substantially less in 2020, 1.0% of GDP, given the pressure we expect on household spending from COVID-19, the fiscal retrenchment and the half year of implementation. Also, Saudi Airlines Catering Company posted a loss of 143.8 million riyals for the 3 months ending June 30 as the pandemic disrupted travel and business activities. It made a profit of 117.1 million riyals for the same 3 months in 2019. The company, which provides catering services to airlines, saw its sales slump by 79.23% to 113.1 million riyals, compared to 544.5 million riyals for the second quarter last year. In a bond filing on August 13, the company said the first 2 months of the year saw normal business activity levels before being disrupted by the pandemic that grounded almost all air travel. For the 6-month period of January to June 2020, Saudi Airlines Catering incurred a loss of 128.2 million riyals as sales slumped, but fixed costs remained the same. International air passenger demand dropped 43% from January to April, with a 98% plunge in April, according to a report from the UNWTO. In Saudi Arabia, air travel started slowing from the end of February when authorities stopped all Umrah inbound passengers in an effort to limit the spread of COVID-19. The Hajj this year that ended on August 2 was also limited to only 1,000 pilgrims who were already resident in Saudi Arabia. The Saudi government grounded international flights from March 15 and they remain suspended to date. Domestic flights were grounded on March 21 and only started taking off again on May 31st. And that brings us to the end of today's episode of Islamic Finance Daily Update. To watch more videos, read news stories, reports, and analysis on Islamic finance, log on to our website, www.WebTVNG.com. Also, you can engage us on our social media handles displaying on the screen. Till we come your way again, thank you for watching and bye for now.